I was talking about all the things I was having on my desk, and I first talked about Ethereum, but I also wanted to talk a bit about healthcare, right, Demetris?
Yes.
Because I think you and I, we are watching UNH. I think Mimi is also
It's
a
happening.
big
Yes, I'm in
holder.
it too. I'm in it too. I keep buying the sucker.
Nestor is in it.
I just bought some more.
It's
Everyone is in it.
trading at lows not seen since 2020.
Hmm.
It's not only UNH, but it's a lot of healthcare sectors that healthcare stocks that are basically down against the S&P. S&P has been making new highs. Tech stocks have been making new highs. Financial stocks have been making new highs. The only sector that's a bit lagging, it's healthcare sector, which is very unusual because if you think about it, are we still gonna be sick in the future? Are we still gonna need some insurances in the future? Yes, and those companies like UNH, ELV, they're gonna lift up their policies. They're gonna get more premiums. They're gonna earn more. The revenue will grow in line with inflation. So this is basically a no-brainer for me to be buying at these levels because if you're a long-term holder with a lot of patience, you just know this is gonna be a big rebound. And I went and looked at the chart, and yeah, it had like one big correction here in 2005. But as you can see, if you're just like a long-term holder, eventually these companies keep earning more every year and every year. And then eventually, yeah, the stock will catch up and make new highs. So basically, that's what I wanted to say. UNH, definitely a player to watch. There's two reasons why it's dropping so much. One is basically they're getting an investigation on fraud. So they did some medical research on patients that said they're really sick. Your policy needs to be higher, so they pay higher, but it's not the truth. So they're lying about how sick their clients are, and it's a research, so nothing is proven. But drama, stocks can drop eventually. And the second is about their latest earnings, where their profits per earnings dropped more than expected. But if you check their revenue, the revenue is still going up. So that's the most important. Just the margins are a bit lower. So in the long term, you could know already that UNH is gonna lift up their premiums and people are gonna buy it because they need. It's a white mode company, which means that basically where are people gonna go besides UNH? They're gonna go to ALV and some smaller players, but UNH is like the biggest one within the healthcare sector. So I think in the long term, this is gonna rebound also the profit per earnings. Yeah.
Okay.
Yeah, it's a solid play for sure, but the problem is that the timing. So the timing is tech is going crazy, and crypto is going crazy, and no investor is operating with an unlimited budget. You have a limited amount of capital that you can play with, and you can tide it on UNH at 2, 3, 4, 5%, because you know the rebound is coming, but you don't know when it's coming.
Yeah.
So you might waste. It's a loss of opportunity. You can like it on UNH, or you can play it with Palantir and AMD and Nvidia and get a 10, 20, 30%, or hold it with UNH and the stock keep going down. That's number one. Number two, it's a bit technical because the fundamentals, we know them already. We know everything, it's out there. We know about the investigation. We have the new CEO. They removed the guidance and then they gave it back a little bit on July 29th. So all the bad news are priced in. So it's not fundamentally, it's just technically. It's way below the 200 moving average, which for a lot of people means a lot. For a stock to be underneath the 200-day moving average. That's another one. And it's healthcare. It's boring.
Yeah.
And unless it start going parabolic, nobody's attention is going to be point to UNH, but it's a member of the Dow Jones, and you don't get into the Dow Jones unless you are the top, the cream of the crop, the blue
Yeah.
chip of blue chips.
The diamond of America. The diamonds of America.
Yes.
Yeah.
So if you ask me an estimate, when are we going to see a move? I think in the Q4 we might start seeing things come back to life because investors have to, the stock goes up if investors buy the stock. It has nothing to do with earnings. Investors have to buy the stock, and an opportunity has to happen. People have to take earnings from something else and say, you know what, okay, it's been long enough. It's been since April. Time is coming, but again, this is just speculation. As long as I am ahead of the S&P year to date, then I have the leeway to buy more UNH. If I wasn't ahead of the S&P for the year, I don't know if I was going to buy the last buy I did last week, but I'm a big believer in the stock. Another thing why I bought it is because this is the third year of the bull market. 23, 24, 25. This is the third year. Start counting the days, start counting the months, how much longer we have in a bull market. I'm not saying this is the end, but they don't go forever. And the latest we get into the bull market, into the equities bull market, the more I want to hold healthcare and consumer
It's getting so cheap, right?
Yes, and consumer staples. Another name that I really like is BJ's. It's like Costco. I know you like Costco, Nestor.
Yes.
It's Costco from 20 years ago, like a small cap, 15 billion, which is, it can be like a 10x in the next 10 years. Again, this is not a financial advice. This is what I have in my portfolio. So my play is, as we start taking profits from crypto and tech, then I'm going to reinvest into the cheap valuations of consumer stable, healthcare, maybe some energy. And then when the rotation happens, and then what I just mentioned is going to appreciate, then we go the other way. That's contrarian in some ways, but that's the way I look at it.
Yeah.
If
No, that's fair.
it makes any sense.
No, it does. It does. They've been beaten up so much, and I think the big beautiful bill has a little bit to do with this, just because they are cutting down on Medicaid, and they're doing sort of like changes in the medical system in America. So we're gonna see some turbulence as the markets start figuring out how to get through this. But there's also a lot of benefit that's coming with the big beautiful bill as well. Again, it's just, it's interesting that everybody talks about defensives like healthcare or gold whenever the market is fully collapsing. But right now, when there's not that euphoria on the defensives anymore, nobody's talking about it. The stock moves to the downside and nobody pays attention. The reality is, like, there is buying opportunities right there, right? Like, whenever somebody tells you buy UNH next, it's probably going to be at a peak, right? Or something when it's coming higher. So that's where, sometimes you have to look at why the market is acting the way that it is. And I do believe that it's just bad news on top of bad news on top of bad news, which gives me a very beautiful like pivot, right? Because it's like they asked about SMCI. Pablo asked about SMCI, and it's a company that I hold in my portfolio. It's not a massive position by any means, but it's an interesting one because they just had bad news on top of bad news on top of bad news, and the stock got so overly punished. I think we reached the 20s. Right now, we're sitting at 47, but we were sitting at 60 just before the earnings. They missed on the earnings, even though the results have been sort of good. Just because we missed those expectations, the company gets punished, right? And then the question is it going to continue to go up? Is it going to continue to go down? The question is like, are they going to continue to miss earnings? And how much are they going to miss by, right? Because you can see the last 3 E's are in the red, right? So the last 3 predictions that the management has made have been wrong, right? But they've also had really good results, right? I think year on year, they grew 48%, which is fantastic for a company like this. One of the problems that I see with SMCI is that their margins are sort of like eatable in terms of the AI revolution, because they are making like liquid cooling systems for the Blackwell chips that are going to be coming out, right? Somewhere the hyperscalers are going to have to save costs, and when there's more competition, there's more likelihood to put the prices down, right? Like, you don't have that pricing power, right? It's like you might be the best at it, but if there's 10 other people making the same product, you kind of run into issues, and you're competing with Dell, you're competing with other companies that do sort of like something along those lines as well. So Again, SMCI at 20, it was a great investment. Right now, I'm still holding it just because, but I bought because of the fiasco that they had in terms of the financials. They had gone through that before. So I had a feeling that they could potentially come out of it unscathed, and they did. But again, they keep missing on the earnings, and it's something I don't like. So I might be trimming a little bit. But again, I'm not a financial advisor. We are all not financial advisors. Do your own research. This is just for conversation purposes only. You know, get inspiration, but make your own decisions. Is your own money at risk? You can also look at our portfolios down below and have a look at them and see what we're buying and what we're selling. Make sure to follow. But if you copy us, you can lose money. So there is the disclaimer, Etoro. You're welcome. But yeah, right? Like it's just, I just think that sometimes the market overreacts, and our like right, like our job is to kind of see whether that's an overreaction or it's warranted. And if it's warranted, we stay away. And if it's not warranted, then we look at it the other way, right?
The market most times overreact on the downside or upside, and it's very rarely that the market is actually rational and pricing correctly anything.
Correct. Well, yeah.
So you have to make up your mind if you are getting more risk. If you want to get more risk, take some off the table. So that's basically. But one more thing I want to talk about the Fed and what's going on with the
Jerome Powell. Are we gonna talk about the Fed? This calls for an episode of its own, but I'm down. Timothy, how are you doing with time? Let me just ask Timothy how he's doing with time.
10 minutes. 10 minutes.
10 minutes.
Okay. Right, we got time. Let's do it.
So on July 30th, it was the Fed meeting. It was the first one I missed because I was on vacation. It was like my last day. I had so much going on, and I couldn't get to do it. But it's upsetting with the U.S. government that two departments can't get on the phone and one inform the other that, you know what, maybe you want to see these numbers before you make a decision.
I'm surprised.
Yeah, because the Fed keeps rates at the same level, holding rates, and then we get the jobs number 2 days later, and it's like a complete miss. And which I believe, if the Fed knew that information 2 days earlier, well, at least we're getting like a quarter point, and a quarter point is not going to save anything. But if we get another miss next month, and then they're going to start cutting, like giving us those jumbos, like half a percentage. I mean, these things are not good. It's going to spook the market. Forget it if we get an emergency. If we get an emergency, forget it. This is like a shit show. Palantir is going down to $60 if we start getting the emergency, because it's gonna spook the markets. Can these two guys get together on the phone, and can somebody call Jay Powell and tell him that a report is coming that you might not gonna like in 2 days? I mean, it comes down to that, but in my opinion, it's just ridiculous that we have to do it this way. You have to, it's like they can't share information, the two departments between them. I'm not saying tell us early, but at least tell him.
Yeah, like make the best decision possible, right? And if you're close to the number, let them know the number so they can at least make the best decision possible. You would think, I was so surprised at the fact that Powell comes in so hawkish from the call, and then we had those numbers. I had assumed they told him something, and it was like, oh, jobs data is fantastic. But it's the opposite of this, right? And we're getting massive revisions.
You know what?
May, June.
He knows.
Crazy.
He gets the news from CNN like the rest of us, not CNN.
Yeah. CNBC. Yeah.
He gets the news from CNBC like the rest of us.
Yeah, he just goes market bus, and he's like, okay, let me figure out this number.
You know what? The Fed employs 3,000 economists. 3,000.
Yeah.
That's a big budget. They can't get it right. I mean,
funny enough, do you see, let me show you the screen. So this is what the market is expecting the rate cuts to be. We were sitting at around, I think we were sitting somewhere just after Powell. Here, let me go here. So just before Powell, it was we were sitting almost like a 30-40% cut. We were saying no cut. And then we got that data, and the probability shifted. Now we're sitting at 91% cut in September. A 60% cut in October, And then December, we are potentially. So we're potentially, the market's pricing in right now 3 potential cuts.
Yeah, that was my forecast, 3
Yeah.
plus. Oh no, it was like 3 plus, but 3. If we get 3, and we're probably getting a jumbo in there. We're not getting just a quarter point. We're probably getting like a 50. One of them.
Yeah, but I agree with you, right? Like a quarter point is not going to do anything in the long scheme
It's
of
not going
things,
to do.
right?
It's not. You know what? You know what? I don't feel bad for Jay Powell getting called names by Trump.
No, I do. I think he's doing a great job. In all
No,
honesty, I think he's doing a
I
great
think he's
job.
doing a great job too. But if he cut like a quarter point in June,
No, like the thing is like he has the ammunition. We're like saying, oh, like look, I have this bullet and I can throw it at the zombies that are coming, right? But there's no zombies right now. Some zombies are starting to rise because of the jobs data, but it's not Powell's fault. The data's wrong. You know what I mean? So he's trying to drive the car, and finally he's looking forwards, and then he's looking he's looking in the rearview mirror, and the rearview mirror is all scratched up. You know what I mean? So it's like before we were looking backwards, but it's like right now everything is scratched up. Now we know why he has to look backwards. It's because the data doesn't work. Like, we cannot trust the data that's coming out if we're revising by that much. Right? Like how good is American data now? It used to be sort of like the holy grail of understanding how the economy was moving and how everything was moving, but not anymore. The question is what can you trust? What can you trust?
you can't trust anything.
You know, it's insane.
You have to get the numbers with someone said on one of my posts. You have to take the data with a mountain of salt.
Yeah, 10
And
kilos, 100 kilos, 1,000 kilos
yeah,
at this point. Yeah, it's
yeah.
crazy. It's
And you know
crazy.
what? I don't feel bad for Jay Powell getting called names by Trump. I'm not saying Trump is doing the right thing, calling him names, because that's not right. But you know what? You put yourself in a position to just cut the damn thing. Just
But
cut.
he can't. The thing is like if they need to cut, he can. The problem is like what happens if inflation goes to the other side? He cut already, and then he's not able to do more. That's the problem I see.
My fear is it's a recession rather than higher inflation. Like if you ask me which one is more likely,
I think they're tilted. But he
yes,
did say in the call, he was like, look, we are looking at the numbers of unemployment.
yeah,
Unemployment just ticked up a little bit,
yeah.
but the non-farm payrolls is the thing that's scary, right? So that's where I'm seeing the like sort of the spark. But at the same time, it's like Trump has like this was one of the comments that I like it drives me nuts. If we are in the best economy the Americans have ever seen, why are we cutting rates? You know what I mean? If the economy is so good, like Trump says, why are we cutting rates? We shouldn't be cutting rates if it's so good, right?
No,
When we
no,
see the
no,
deterioration, we
no. You
use it
have
as a stimulating tool.
no. You have to get to neutral. You have to get to neutral, like 2.5%, and then if you get a recession, then you cut to one
Zero.
percent.
We go on to zero.
Or to zero, but you have to get to neutral. You have to give people an opportunity to borrow at the lower cost so people can get houses or whatever they want to buy with. Uh, just having like higher rates doesn't help anyone.
Yeah. The thing is like I just right now it's okay. We had inflation. We're still coming off it. You know what I mean? Like we're still not at that rate that we want to be in. 2%, it's still 2% on the higher level. So the
Mhm.
consumer is getting hurt. We're seeing the consumer getting hurt. The data is starting to flash real yellow now.
Yes.
Back in the day, I was scared. Now I'm more scared. That's why I'm taking money off the table. Timothy, what are your thoughts on this?
My thoughts is
Go buy Ethereum. No, I'm joking. I'm joking.
I want to get back on Dimitri's points before we were talking about Powell and the Fed. Like Dimitris was saying, there's a difference between a stock in technical problems, the charts, and there's a difference in a stock being in problems in terms of the business. A broken stock or a broken business.
Mhm.
That's how you differentiate between am I gonna buy this or am I gonna avoid this? Like UNH, the business is still doing great. We can buy it. But Intel, for example, is an example I compare with. Is in my opinion not. I don't know if you hold it, Nestor, but in my opinion, it's not
I want to buy it.
as valuable
I want to
as
buy it.
valuable. It's in
I
my
want to buy it
opinion,
because of the
it's a
position that it's
broken
in.
business.
It is. It is. But America can it has the same problem with Boeing. America cannot let Intel out of its sights. It's the American chip manufacturer, and it can't let it go. So I have a feeling something will happen. And if Trump is already calling for the CEO's head, It's crazy. Like today, the stock's down because Trump was like, the CEO needs to resign. They just chose the guy. They just chose the guy. Let him, like Trump was like, I just got here. The other guy just got here. You know what I mean? Let him cook. Like he was the CEO that I wanted them to choose because he's from Cadence Technologies, I think, or like a microchip company that's actually done really well after earning 6% up. Like I think that they could potentially get them out of the sort of gully they're in. But again, it's a high risk play. Am I gonna put the same amount of money that I have on Nvidia? No. But a 1% trade, why not? Intel, it's still Intel. You know what I mean? Like they just didn't make GPUs, but it's still Intel.
Don't you think Intel is like Chrysler or like the car companies from Detroit, like the old guard of technology? They've been around for so long, they got complacent, and then the new players came and wiped them out. That's
100%. 100%. It's exactly that. It's American exceptionalism at its peak. And what happens when you are so comfortable? You get chewed under. You know what I mean?
Nestor, I do understand your point. The thing is, you're trading it. I'm talking about holding for multiple years. Like, you don't want to hold Intel for 10, 20 years now.
I agree. I mean, like, maybe. You know what I mean? If they turn it around, maybe. Because they are able, if their technology somewhat, if they make the right call, if we focus at like 2026, 2027, and they can start actually making competitive chips, but it's high risk. It's high risk.
Do you know how difficult it is? Do you know how difficult it is to pull off a turnaround in the stock market?
It is 100%.
Oh my 100%. God. It's impossible to do with good companies.
Yeah.
It's extremely difficult to do with Intel. But speaking about American exceptionalism, I think the U.S. stock market is back.
Yeah, you called it. Is it outperforming? Is it outperforming the European one? I wonder. Is it outperforming?
Yeah, today I don't think so. Why don't you check? Check the S&P versus what is the stocks 50 or
the European banks are outperforming tech. So,
but how long were European banks were underperforming tech? Yeah, what's the time horizon we're trying to trade?
No, year to date, he's correct. I think Deutsche Bank is like up like 100% or something like that.
Well, I saw German manufacturing came in way lower than expected. People are assuming that Germans are just going to start friggin' don, you know what I mean? But apparently not. It's like manufacturing is coming down.
What was the S&P versus the stock?
What's the index for
stocks? STOXX 50.
Yeah, the Euro 50. Okay, here we go. Let me compare it. Let me full screen this and compare
with the S&P, not the Nasdaq.
Yeah. Okay. Let me have a look. The thing is, oh, by the way, something super interesting. The U.S. index decline. Are we still based on the euro at all-time highs in the S&P? Because it's like if you grab the S&P 500 and divide it by the euro, we were actually not sitting at all-time highs, which is super interesting because the decline of the US dollar has had a lot of rise. I wanted to talk to you about this for a while. We need to do an episode, Demetris.
Yeah, let's do on the weekend.
Yes. All right, let me try to get this. So it's the EX versus.
Guys, I gotta go.
Okay.
But okay. You can leave.
I'll show this and then I'm leaving because I have to leave too. I have to leave too after this. But I'm trying to get the year-to-date comparison. The year-to-date comparison is like
the construction is ongoing in the Mendoza household.
So much. Even though it's crazy. There's nothing passive about passive income.
There you go.
Nothing passive about real estate.
Show the chart before Timothy leaves.
I'm trying to, but it's like I'm having. How do I? Here, just give me a second. Timothy, are you better than me in? There we go. Okay. I got it. Yes, is that it? No, a SPY. I'm just using SPY because why not?
We have 4 months to go for the end of the year.
This is super interesting. Okay, give me a second.
Because I said at the beginning of the during the Liberation Day volatility that by the end of the year, the US outperforms Europe. Okay.
So January 25. Let's go January 25. Okay, still outperforming. So from January 25 to August 25 is still the FAST, apparently. So the SPDR Euro Stock 50 ETF. It is underperforming. It is.
Underperforming, yeah. I know it's underperforming, but
it's catching up.
we have
Yeah.
we have the rate cuts in the Q4. You know what? If the rate cuts come through, and the thing goes crazy with everything, like in 21, I'm gonna seriously consider like getting more conservative with my strategy for 26. Just putting
Okay.
out there.
Okay. All right. I think we're good. Let's end the stream. Let's let Timothy go. He just wants to go.
He
All
has
right.
he has an appointment
Yeah.
at the
Yeah.
neighborhood.
Yeah. Thanks so much for watching, guys. I appreciate you all. Peace out, everybody. Have a great day.
Nice to see you guys.
Bye.
Bye.